Hey guys, welcome back. You're still watching Trading Hour. So it's now around 100-point cut that we are seeing on the Nifty compared to what's going on in the rest of Asia. And of course, the kind of handover that we got from the US. So this is looking quite all right. And the Nifty Bank, by the way, as we speak, has also moved into the green right now. So take a look at SBI, Indocent. These are some of the stocks which are doing better from the Nifty Bank pack. Even something like a Kotak Bank. Another space which is looking really good today is the real estate sector. So something like a DLF, Godrej Properties, Sobha, all of these stocks holding up quite well. Of course, Bajaj Finserv is the top gainer right now, and that also seen a massive recovery from the lows. For now, that stock is up almost 4%, 3.7% higher on Bajaj Finserv. And if you take a look at a few of these other names, so something, of course, like a Hero Motor Maruti, they've moved even higher in the past few minutes that we have been talking, and a lot of them sitting at fresh 52-week high. So do keep your eye out on that entire pack. Of course, it is in focus also because the auto sales figures are trickling in through the day. But let's get a conversation going now. Unmesh Sharma, Head of Institutional Equities at HDFC Securities, joins us now to discuss the way forward for the market. Unmesh, good morning. Thanks a lot for joining us. This is Pavitra. So, my first question to you is on how do you see this entire setup where globally you're seeing one thing play out, but India seems to be a little bit decoupled from that. How do you look at it, and how do you think the Indian market is headed from here?
Yeah, no, actually the move after the first night, after Jackson Hole has got us by surprise, no doubt about that. Having said that, we believe this would be a temporary phenomenon. The tone has turned distinctively hawkish. I think there is no doubt about that. This is also something that we held. If you remember, about a month ago on this channel, we had given our view that after the Fed conference, which had happened after the FOMC meet, post that we were not convinced that the dovishness would continue. So that has happened. Now, as far as the move in the markets is concerned, I think that at least the first day's move can be explained by the fact that there was the rebalance happening. But at this point in time, we believe that the market, even if you look at the chart today, it dipped down, which was a little bit along expectations. We've had a decent GDP print. But honestly, we continue to hold our stance that in this long and arduous fight against inflation, there will continuously be very high volatility, and one should lighten their portfolios and move away from high-risk, long-duration assets as far as possible.
Unmesh, morning. Autos is in top gear right now. The Nifty Auto Index has hit a fresh 52-week high. The sales numbers that are trickling in are also looking good. But considering the kind of run-up that we've seen in auto names, do you think the risk-reward is still favorable? And if yes, what would you be betting on and why?
No, so I'm unable to give single stock recommendations because I don't sit within research. But having said that, in our model portfolio, yes, we have added weight consistently. Our analyst who has initiated coverage recently also has a positive view on the autos. We believe the run-up was justified in that sense, because that's been the view that we have been holding. Within our model portfolio, you will notice that we have a fairly high degree of positivity on the domestic economy facing sectors. Autos within that remains one of them. So while yes, the run-up has been breathtaking, at the same point in time, we believe we continue to remain constructive on this space, especially on the domestic ones.
Okay, hi Unmesh, morning. One of your preferred sectors is also insurance, but this is a place where now a lot of investors have been chasing returns. What is the upside, say, over the next few years?
Okay, so look, insurance, we like both top-down as well as bottom-up. This is, again, going back to the macro environment, which we believe remains continuously cloudy. Within that, one of the themes in which we like to play this is to look at themes which are not affected by the near-term issues as far as the macro outlook is concerned. So if you look at whatever discussion we are having on whether it's a recession, whether it's the quantitative tightening and all of these matters, finally, what will happen is that investors will want to look through that and go to themes which will survive the whole, structural themes which will survive that. Now, within that, financial inclusion remains something that we like. Insurance is the top of that, along with capital markets. But at this point in time, insurance is something we like. from a bottom-up perspective, all the underlyings are in place. We continue to be very constructive on the insurance space.
Okay, constructive on the insurance stocks. Another one that you have as your preferred sectors is the IT pack. And I have to ask you about this one, after the kind of beating some of these stocks have taken. Of course, it is a global phenomenon that we have seen play out. But how do you look at these now? And do you think that we're not going to see too much more of a fall from here?
No, so look, our analysts have come out with an excellent thematic report on this one. What they have done in the past is the last few reports, they looked at what is happening on the cost side, then what is happening on the demand side. Now, there have been issues such as attrition really and the wage increase which has come through, but we believe that a lot of that is in the price. What we are looking at now is that structurally the demand, the most recent thematic that we wrote last month about the structural drivers of demand in that, we are quite constructive on those. What we believe is that more diversified companies, and especially the ones which are looking at now the movement into things like the cloud and digital, are the ones which will survive within that. In that we are selective. Some of the mid caps we think that after having run up and now at a significant premium to the large cap pack are not where we are not that constructive, but at the same point in time we believe that there is also some amount of positivity which could come through because of the fact that there is no major reason to expect the currency to appreciate, and on top of that the demand drivers continue to remain intact. So we are structurally very positive on this space.
This Q1 GDP print, that's come as a bit of a miss. Does it change your assessment of what the quantum of RBI rate hikes could be? Does it change and impact what you were expecting out of equities, maybe perhaps in terms of the EPS growth? Corporate profitability could be lower than what we had earlier anticipated? Because economists are bringing down the GDP forecast for the year.
Yeah, so look, there are two views on this. One, from the economic perspective, it was slightly lower. Now, the headline number obviously looks strong because of base effect. But at the same point in time, the number even adjusted for that base effect, if you assume that last year was a normalized year, would also be slightly lower than what we thought, because we really were looking at a GDP print of 7+ for this fiscal year. Now, in that context, will the numbers come down? Marginally, yes. Is the number, however, that big a miss that it should be seen in the context of whether it impacts corporate profitability? Two things. One is marginally, yes. Secondly, in any case, if you look at the way in which our model portfolio and EPS number for this year is constructed, we are a little bit lower than consensus anyway. So this becomes another reason for the consensus to kind of accelerate down to the point where we can see more muted earnings expectations. So this could accelerate the trend towards the catch-up on that front for the earnings downgrades for this year.
All right, Unmesh, we are going to leave it at that today. Thank you very much for joining us and taking us through your call on the market, as well as a lot of these individual sectors and stocks that you do like. But with that, we're going to get into a short break now. On the other side, we're going to talk about the auto space. We'll get you a roundup of the sales numbers that we've got so far for August. And then we're also going to talk with the management of Sansera Engineering.